Hey guys, what's up? How's it going? Welcome to today's video, and inside today's video I'm going to share with you guys 8 Canadian stocks to look into buying going into 2021. So I did my best when coming up with this list to include a wide variety of stocks in different sectors and different types of stocks. I've included some dividend-based stocks, I've included some growth-based stocks, I've included some old stocks that have been around forever, and I've tried to include some newer stocks as well to give you guys a wide variety of different stock options that you guys can look into buying. And if you guys are brand new to the channel, be sure to hit that like button and subscribe if you guys want to see more Canadian-based investing content. So the format of the video is going to be pretty simple. I'm going to do a company intro for each one. I'll talk about a few points and then we'll move on to the next company. I'll try to get through these pretty quickly since we do have a lot of stocks to talk about in today's video. Alright, so the first stock on today's list is going to be TransAlta Renewables. So with the US election finally coming to an end, one might question what's going to happen with the stock market, and we've already seen that the stock market has kind of been a little bit up since the election happened, and we can expect prices to go up and down. So this is why I think this stock is actually a pretty good stock, because TransAlta Renewables has been doing very well. I personally feel TransAlta Renewables is a perfect defensive utility stock to hold going towards the end of 2020 and going into 2021. TransAlta Renewables was founded in 2013 and is based out of Calgary. It's got an enterprise value of $4.0 billion and a market cap of $3 billion. TransAlta Renewables is focused on renewable energy and renewable energy resources, which is nice to see because I do believe this is the way of the future. They focus on wind, natural gas, hydro, and solar. As you guys can see in the following graph, TransAlta Renewables has had an absolutely recovery since the pandemic that happened early this year, currently trading at about $17 Canadian. Another nice thing about TransAlta Renewables is that they have a nice juicy dividend yield of about 5.2% that pays monthly. So if you take a quick peek inside my Wealth Sober trade account, we can see in my TFSA that I have 17 shares of TransAlta Renewables, and I'm currently up about 17.62% since buying it early in March this year. It's actually my best performing stock inside my dividend-based stock portfolio. If you guys want a nice renewable energy based utility based stock coming out of Canada that's relatively new, then TransAlta Renewables has had some pretty good growth, and I think it's definitely worth adding to your portfolio. TransAlta Renewables is currently trading at $17.36 on the TSX and can be bought under the ticker symbol RNW. And my second stock on the list is going to be none other than Rogers Communication. Rogers Communications makes most of the money through wireless phones, selling phones, TV bundles, internet, and even MasterCards and financials. Now, I've been talking a lot about telecom companies on this channel because I truly do believe that Canada has some of the best telecom companies, especially in terms of companies that grow really well and also have some very nice good dividend yields. And when it comes to these reliable dividend-based and stock appreciation-based telecom companies, Rogers is definitely one of them. You can bet that Rogers is going to be a nice stable stock to hold going over the next couple of years, which is really nice because the markets right now have really been up and down over the past little while. Rogers shares have dipped a bit going towards the beginning of November, so we should see some nice recovery going towards the end of the year. And since the pandemic, Rogers stock is still down, indicating that it is probably a good buy right now, but we are starting to see some signs of recovery going towards the end of the year, so we should see this start to pick up going towards the end of 2020 and going into 2021. Rogers Communication did great in their last Q3 earnings, beating the consensus and all estimates. And on this graph here, as you guys can see, the adjusted diluted earnings per share for Rogers is currently sitting at $1.08. Total revenue from 2020 is just a little bit under revenue from 2019, which is very nice to see. And the other nice thing we ought to see from Rogers is that in their Q3 earnings, we've seen a nice increase in revenue of $3.6 billion from their Q2 earnings of 2020. So all this information basically shows us that Rogers is doing a nice job in recovering going towards the end of 2020. Rogers also has a nice price to earnings ratio of about 17 going towards 18 towards the middle of November. And Rogers is currently trading at $56.79 Canadian on the TSX under the ticker RCI.B and has a nice dividend yield of 3.52%. Historically, Rogers has had great growth, and I do think right now that this stock is undervalued, and I do see some nice increases coming over the next couple years. The third stock on this list is going to be none other than B2 Gold Corp. So when I first started this channel earlier this year, I didn't do a lot of research and I didn't really pay attention too much to gold stocks, but after seeing how well gold has done over the past little while and throughout the pandemic, it actually has got me really interested to see how gold stocks are doing, and I might even be adding a couple more gold stocks in the future to my portfolio. And one of these Canadian-based gold stocks that really caught my eye recently is B2 Gold Corp. B2 Gold Corp has had tremendous gains throughout the pandemic this year. As you guys can see here on this graph, ever since March happened and investors switched to buying more gold because of the uncertainty in the stock market, a lot of gold stocks seen an increase in price, and B2 Corp was one of those stocks where stock appreciation just kept growing and growing, and I think going into the future with the uncertainty in the stock market, we should see gold prices continue to increase over the next couple years. In quarter 2, sales were up 65% year over year, which ended up resulting in a 228 increase in net income. And as you guys can see, going from quarter 1, we saw a nice increase going into quarter 2. Then quarter 2 just absolutely exploded into quarter 3. Now, gold stocks are seeing huge gains. It could still continue to grow going into 2021 and the next couple years as well. B2 Corp also has a dividend and it has excellent financials. As you guys can see here, very low payout ratios with all their high earnings and a very nice low dividend. So lots of chances of increases going into the future if you want to pick up B2 stock today. With a short-term dip, I think B2 Gold Stock is in a good position to buy right now. And B2 Gold Corp is currently trading $8.43 Canadian on the TSX under the ticker BTO and has a nice dividend yield of 2.53%. My fourth stock on this list today, guys, is none other than Fortis Stock. Now, going back to safe, reliable, and defensive stocks, Fortis Stock is definitely one of those nice utility-based stocks that you can just really buy and hold forever. Fortis is a leader of power distributions and natural gas services. The nice thing I love about Fortis Stock is it has very good financials, very good cash flow, and a very good payout ratio with opportunities for room for tons of growth throughout the company going into the future. If we look at the history of Fortis, Fortis has experienced tremendous growth over the past couple decades, and they have a large history of over 46 years of consecutive dividend increases. If you are a dividend investor such as myself, things don't get much sweeter than that. Fortis has done an absolutely tremendous job of stabilizing during the pandemic, initially dropping in March but recovering quite well and now approaching all-time highs. Fortis has experienced tremendous growth, as I mentioned before, in the past couple decades, and the dividend yield is still pretty low right now, only sitting at 3.65%. I think there's still tons of improvements, and this is definitely one of those stocks you want to buy and hold forever. Fortis stock is currently trading at $55.31 Canadian on the TSX, and it trades under the ticker FTS. Fifth stock on my list, guys, is going to be WELL Health Technologies. Now, I don't think I've ever talked about WELL Health Technologies on this channel yet, but nonetheless, they've had a tremendous run throughout 2020. At the time of recording this video, WELL Health has returned close to 400%. And this is most likely going to increase going in the future as more patients use their telehealth services. Since most people are moving online, I can only imagine that their business is going to continue to grow, and this is one of the weird companies that actually really benefited from the pandemic that's happened. The company reported a gain of 124,000 visitors on its platform in quarter 2. And WELL Health is also looking to expand its business into the US by looking to acquire another telehealth company called Circle Medical. And if they manage to pull this off, we could see WELL Health have a huge year in 2021, just like they did so far towards the end of 2020. WELL Health stock is definitely a company I'm going to be looking forward in the future and going to be adding to my watch list, as I probably will keep an eye on it to buy possibly new shares going into the future. WELL Health is currently trading at $7.47 Canadian under the ticker WELL on the TSX, and currently does not offer a dividend yield, as this is a new growth-based stock. Alright, so my next stock on this list is none other than Riocan. So it's time to talk about some Canadian REITs, and I recently did a video about Riocan not too long ago. Check that video out if you guys want. I'll put a link to it in the description of this video. But otherwise, I'll just give a quick little summary of what I think about Riocan right here in this video. So Riocan is Canada's second largest REIT, and it's heavily based out of retail-based properties. Now, although REITs have had a horrible quarter 2, and Riocan is no exception here, they've had a horrible quarter 2 as well, going into quarter 3, we've actually seen a nice little gain and a nice recovery for REITs. So if quarter 4 can still be another positive gain, I think REITs are going to do really, really well. And in fact, even just recently, REITs have seen a nice little increase on the TSX. So I think Riocan, if things continue to open up and they keep getting that rent coming in, I think Riocan is going to do really well going into the future. And I think with the price it's at right now, I think it's a great time to buy. As stores open, Riocan can collect their rent, and this will really help them gain value going into the future. As you guys are probably aware, Riocan has a monstrous dividend yield of sitting at around 9 to 10%, and although there is risk with this for sure, I do truly believe that Riocan has the financials and the stability to recover going into long term, and I think this is a great time to buy that nice big dividend yield. Alright, so Riocan is currently down about 40% compared to what it was trading at before the pandemic happened earlier this year. And the reason why the dividend is so high, isn't so inflated, is because of the fact that the price dropped so much. So I think if the economy recover, and when the economy does kind of fully recover, as we already started to see here, Riocan should start to rise up. And this is why I think buying Riocan right now is such a good buy. Riocan is currently trading at $16.50 on the Canadian TSX under the ticker REI.UN, and I've been steadily buying Riocan since the pandemic happened earlier this year. Alright guys, we're getting towards the end of the video, and my 7th stock pick is going to be Good Food Market. So this is another stock that I haven't talked too much about on this channel, but Good Food Market is definitely one stock to keep on your watch list going into the future. During the pandemic, Good Food Market was actually one of Canada's top market performers across all markets. Online grocery and meal kit type delivery services are starting to become really popular here in Canada, and the funny thing about it is that this whole industry is pretty new, so I think there's tons of opportunity for growth and expansion going over the next couple years. And the nice thing about Good Food Market is they're estimated to have about 40% of the Canadian meal-based delivery services market, so that looks really good for them, and if they can continue on that trend, we should see some nice increase in profits and some stock rises and price increases over the next little while. I think Good Foods is going to do well going over the next couple years, and as more and more people move to buy things and order things online, this new grocery type thing and this new meal kit thing that we're seeing here, I think is going to do really well in Canada. Good Food Market Corp is currently trading at $8.85 Canadian on the TSX under the ticker Food, and is currently not supporting a dividend as they are a new growth stock founded in 2015. Alright, so my last stock in this video is going to be maybe one that's pretty obvious for you guys, but it's going to be TD Bank stock. And of course, it wouldn't be a top Canadian stock list without at least one Canadian bank. And in today's video, I'm going to be including my favorite bank, of course, and that's TD. Alright, so just like most of the big banks in Canada, TD has had a pretty rough year. And at the time of this video, TD is currently trading at around negative 20% since the start of what it was at of 2020. And at the end of the day, I think this is a great opportunity to buy one of the best bank stocks in all of North America. As you guys can see here, TD stock has been ridiculously consistent over the past few decades, and although it's down and it might take a little while to recover, I'm definitely going to say it's going to recover at some point in time, and buying shares of the stock at this time is just going to give you massive gains going into the future. And as a dividend investor, one of the best things I like to see when it comes to stocks is dividend growth. TD over the past 20 years has an annualized dividend growth rate of 11% per year. That is absolutely crazy. So TD stock has been an amazing dividend stock to invest into, and I firmly believe that they're going to do well into the future as well. I've been buying TD stock since March earlier this year, and I've been buying TD stock since March earlier this year, and I will continue to do so going towards the end of 2020 and going into 2021. Alright guys, so that's it for this video. Let me know what you guys think in the comments, and be sure to share your top Canadian stock picks as well. If you guys want to see more content, be sure to check out my top 13 Canadian stocks list. I'll put a link to an end screen there. You guys can check that out. In that video, I dive inside my portfolio and I show you guys all my 13 Canadian stocks, dividend stocks that hold inside my portfolio. So check that out if you guys want. So thanks for watching the video, guys. Let me know what you guys think in the comments, and I'll see you guys later.